There was a slight disagreement, which we can blow it up and make it bigger, in terms of earnings, right? You're expecting them to slow down more than Yianos is.
Absolutely. I think that there is a risk that we have minus 5% for global corporate earnings for calendar 2019. I think there is a chance that US corporate earnings growth this year comes in at 0, so still outperforming the rest of the world. But analysts are looking for 10% in Q4, and I just think that's unrealistic in the context of the global economic growth trends we see, in particular the slowdown in China and the pressure that will be on margins, which are still at record levels.
And you think James is just too pessimistic?
No, I think that's already priced in. So that's a key impact, I think, for the markets here. And I think we need to be looking at it not from the perspective of growth in the next few weeks, but from the perspective of support from central banks. And I think that's operational. To James's point, if we don't have any progress by Q2, I think his concerns are going to become a lot more relevant, but we're still in Q1.
Okay, could we see a Fed actually cutting interest rates this year? Because that would be a sign of a significant slowdown.
The market is pricing some, distinct probability of a rate cut. Our economists don't think so. And I think that, listen, again, the change in policy that we have seen has been fairly significant. And as long as the Fed sticks to it and it gets some help from the Chinese and the Europeans, that becomes a lot more meaningful. I think we are in that phase.
James, if we do have a resolution, even if it's a temporary resolution in the US-China trade rift, does that change your view on earnings?
It is certainly very supportive of markets having a further leg up. Yeah. I'm not convinced it actually demonstrably changes the earnings outlook, because the global economy grinds through at a pace that isn't going to be materially altered by what I suspect is already largely assumed to be better news coming out of the trade talks.
Are we going to see more consolidation if earnings are under such pressure?
Well, what worries me, lifting the lid on the market, is how cyclicals and financials are still priced for relatively good news. And I see pretty well no good news coming out of the Eurozone at the moment at an economic level. Therefore, I think that we will see significant downgrades to corporate earnings numbers for Europe, and in particular from cyclicals generally. So I'm looking at good quality growth areas at a company level, at a sector level. I'm favouring healthcare, and I'm back to favouring IT.
Yianos, could we see actually an upside or a surprise upside from emerging markets in 2019?
It already appears that we're getting a little bit of an upside here. Our economists have formulated a nowcasting exercise that actually showed for Q1. We're missing a lot of data, but the first instance is that you're getting stabilization in global growth numbers, and most of it is coming from emerging markets, which is actually very surprising. And I think that probably has to do, again, we'll find out, further down the line in the future, that China probably had to do something both on the way down and on the way to stabilization. I would agree with James. The upside is probably a bit further away. But again, think of expectations. Most people are not expecting good news at this stage.